welcome to Hardman Talks. My name is Richard Angus. I'm Head of Business Development. And today we're following up on the previous conversation that we have had with Jack Worne of EHE Venture Studio. So Jack, over to you. Perhaps you'd like to start by just reminding us a little bit more about EHE's expertise and your areas of focus, and then we'll move on to have a conversation about some key matters in the market that I think most investors would be interested in hearing your views on.
Sure. EHE are a venture studio. We're active venture builders in the tech space, focusing on AI businesses. The team are all ex-entrepreneurs or senior level operators in companies. So we've been there, we've got the scars, we've got the badges, and we want to play a more active venture building role in these companies.
So you must be aware of a number of investment opportunities. So I think it'd be interesting to know, how do you decide which ones to progress with and which ones to leave behind? Because you must have a lot of inquiries or opportunities.
Yeah, definitely. We in the AI space, it's very broad. We're receiving anything from 5 to 10 opportunities per week inbound, and we have to filter through those. And we're looking for the really defensible opportunities that have a good product market fit, and the businesses that can demonstrate a good team, good traction, and good tech are the ones that we typically take a deeper look into.
So one of the key issues in the market at the moment from a lot of investors is the valuations. The point being that it's interesting to know how a company is going to make money, but as an investor, I want to know how I'm going to make money. So if I buy a stock at the wrong price, it could basically influence the return. What are your comments on that topic?
I think the market has been tough on valuations the past few years, and that's also reflected in the startup space. So founders are pitching at much lower valuations than historically, but that's likely to change as the market opens up. But when we're valuing a company that we're looking at how defensible the team is, how big the market opportunity is, and how realistic the traction is that they can get in market.
And presumably, given their balance sheet, how much cash they have at the moment, etc., as well as the opportunities they are putting forward, how long the cash they have at the moment might last. Have you any comments on that? Because one of the things that seems to worry people is if you invest in a company and it fails to meet its targets, runs out of cash, that could be the end of the company, and therefore the end of the investor's life. Have you any comments on that?
Yeah, I mean, it is a patient investment in the startup space, and we always like to be part of investment rounds with other investors that gives that startup 18 months runway or runway to profitability, and that way, they're well capitalized and ready to take advantage of any opportunities for growth that they enter in the next 12 to 18 months.
Okay, so I suppose the other big topic is investor sentiment. And since we've had a lot of experts tell us we're in an AI bubble or potentially an AI bubble, but obviously there's a huge industry here. You're obviously very confident about prospects for certain companies in this enormous industry. So what comments would you make in response to anybody who says, oh, everything's overinflated, it's a bubble, in other words, putting investors off as opposed to encouraging investors to spend more time looking for appropriate opportunities that suit them?
Yeah, definitely. I think, AI in particular, we see the valuations in the headlines for the mega deals that are taking place, particularly in the US, but that's not really translating into the startup world. Those businesses are valued just like they were a year ago, and they'll continue being valued like that on the fundamentals, on the opportunity, and all the benchmarking that goes with that. But I think the headlines in the news around big bubble valuations are kind of very edge case and don't reflect the full market, particularly in the startup space.
So I know it's impossible to forecast what's going to happen in 2026, but do you think there's a good chance that the underlying trend in investor sentiment will improve over the next 12 months as the benefits of AI, shall we say, in the broadest terms, become more visible to a bigger audience? Do you think that's a reasonable stance to take?
Yeah, definitely. Tech traditionally has higher valuation multiples than other sectors. AI is the same. AI has a premium right now, and that will continue. In terms of the opportunity to create more exits in AI, the IPO market starting to open up. That's a good sign. And also, if you saw the tech prosperity deal between the US and the UK recently, that's a $40 billion investment over a number of years that just really validates that AI is definitely here to stay for the next few years. And there's going to be a lot of more opportunities for these businesses to scale and exit.
So did you find that announcement surprising, or did you think in the background for some time there's been this sort of appreciation and cooperation between the nations?
No, I think that there has been the cooperation. I think there's a requirement to leverage the innovation in the UK and the talent and the expertise, and the US have clearly seen the value in that, and they're bridging the two countries with this big deal.
Well, I think the US has done very well out of the UK entrepreneurial talent in the past. So that takes us on to the sort of a global aspect of the whole market and the valuation of intellectual property, and the feeling with some people that the Americans in particular, but also other countries, are taking advantage of the fact that we can't recognize in this country as an investment class the value of our own IP that's sitting on our doorstep. It's very difficult to value IP. I understand that. In a bull market, it's a cost of doing business as such. But in a market like this, there's a lot of talent that's probably left on the sideline. So have you got any comments about IP valuations and how people should look at them?
Sure. I agree with what you said. The US is kind of valuing IP higher than the UK, and that comes with kind of problems and opportunities. The problem is that talent might leave the UK and head over to the US for those opportunity. But at the same time, if you're a business in the UK and you're IP rich, and there's a market out there that will price you significantly higher for your business or your activity, then it creates a great opportunity for investors in UK companies that have global aspirations, where they can target and benefit from that upside in the way valuations of IP take place in the US market.
I think it might be interesting to finish off with, can you give an area or two of the market for 2026 in AI that you feel will be getting greater awareness in the investor space, and how do people understand to follow the trends clearly?
Sure. We've seen in the news the AI chips and the hardware associated with AI has been a big topic the past 12-18 months. I think we're going to start to see a bigger trends of dual hardware and software AI companies getting more traction, and then longer term software focus thereafter. I think that's the transition that will take place over the next year or two.
Good. So you look as though you're in for some interesting times.
Yeah, it's going to be really interesting.
That's great, Jack. It's been absolutely brilliant talking to you. Thank you very much for your time. And thank you very much to our audience today. Before we conclude, I just have to say yet again that this has been a conversation for informational purposes only, and nothing should be construed as giving investment advice. Investors must make up their own mind, having done their own due diligence. But anyway, thank you very much for joining. And if you have enjoyed this session, would you please subscribe and like, and hopefully we'll see you at a further Hardman Talks. Goodbye for now.
Thank you.